Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. Today, I'm joined by my Water Tower Research colleague, Richard Tullis, who recently joined our team as Managing Director and Strategist for Natural Resources. Last week, Richard published his inaugural WTR Energy Weekly Report titled Energy Roundup, and today we'll be discussing that initial report and what investors can expect going forward. Good morning, Richard. Thanks for joining, and allow me to reiterate how excited my colleagues and I are to have you join our ever-growing Wall Street platform.
Good morning, Tim. Great to be here, and I really appreciate the opportunity to join up with the Water Tower and looking for great things going forward.
So, Richard, to kick things off, your inaugural Energy Weekly was published last week. Please articulate for us what you hope to achieve with this first weekly report.
Well, my background, Tim, is in the energy industry, having spent 11 years working for oil and gas companies, both upstream and midstream, and then 16 years as an equity analyst covering energy and later renewable energy. So I'm generally very passionate about the industry. With the initial report published last Wednesday, part of what we wanted to accomplish was threefold: provide an overview of where the fossil fuels industry, in other words, oil and natural gas, fits into the current energy landscape, while focusing on some of the main drivers of future energy, namely electricity, data center needs. Also, we wanted to build an index of any energy exploration companies, some of whom are 100 plus years old, to help us tell the story going forward, along with providing investors with a large selection of key metrics by which to compare the index companies. And lastly, to offer commentary on what is driving current oil and natural gas prices. And we've certainly seen a lot of what's driving them over the past weekend, while also providing our forecast of monthly oil and natural gas prices for the remainder of the year. And in a couple of months, we'll start to publish the 2027 price outlook. We also featured a single energy E&P company in our snapshot last week, and we plan to do that going forward as well on a weekly basis.
I'll be very excited to watch this. So, Richard, zooming out to the big picture initially, how important is traditional energy to today's global energy supply?
In a word, Tim, it's massive. Oil and natural gas supplied 53% of total energy consumption, total global energy consumption in 2024. And the IEA, which is the International Energy Agency, they project that oil and gas combined will still supply 50% in 2035, even with expected continued growth in renewable energy supply. Our overview of the current energy demand outlook for oil and gas industry highlighted how that demand outlook has improved materially over the past year. Every year in the fourth quarter, the IEA publishes its World Energy Outlook, where, among other things, they project global energy demand looking out 20 plus years. So in the 2024 energy outlook from the IEA, they projected peak oil around 2030. Only 1 year later, the IEA was forecasting that global oil demand is expected to increase by about 5 million barrels a day by 2035 from about 100 million barrels a day in 2024. So roughly 5% growth over that period. Not massive growth, but still growth.
So I appreciate that there's many drivers, but what were the main drivers of this demand forecast change?
It's shifting U.S. decarbonization goals. That's part of it. Then rapid growth in electricity consumption, including data centers, and then slowing, at least in the near term, adoption of electric vehicles. And that was mainly in the US as well. As more global citizens gain access to electricity, and in particular air conditioning, energy demand naturally increases along with it. Global power demand is expected to grow by about 3.5% per year on average over the rest of this decade. But electricity demand is on course to grow at least 2.5 times as fast as overall energy demand through 2030. So the IEA refers to this as the age of electricity, and we agree that really electricity is a huge driver in shaping energy consumption over the next 5-10 years.
And speaking of data centers, how much power do they typically require, Richard?
So a large AI data center has power demands of about 100 megawatts or more. That's enough power to really operate about 70,000 homes over the course of a year. U.S. data centers in total consumed about 183 terawatt hours of electricity in 2024, or about 4% of the country's total electricity consumption. By 2030, this figure is projected to more than double to about 426 terawatt hours, representing about 10% of US electricity demand in 2030.
So, what are your oil and natural gas price forecasts for this year? And please describe your process that you use to arrive at those projections, particularly given the heightened geopolitical backdrop right now.
Yeah, it's a great question. It's so timely too, with everything that's been happening since early Saturday morning. And everything, the prices have just been volatile throughout the whole year as we had issues, geopolitical issues in Venezuela and the buildup in Iran to where we are now. And there's other components as well. The North American winter weather has been driving natural gas prices much higher than prior year. For instance, the winter storm Fern that really swept through the entire U.S. in January, toward the end of January, resulted in a massive 360 BCF U.S. natural gas storage drawdown that week. And that was the largest on record and nearly 90% above the five-year average for that week. So that helped push January average spot price up to about $7.72 an MMBTU. That was up 81% compared to just the month prior. So what our process is just taking all the different components. So we use the actual prices to the time we're publishing the report. So we had January, half of February when we published last, and when we publish next, we'll have all of February as well. And then we project out the rest of the year based on our assumptions. So over on the natural gas side, we take weather consideration and LNG demand. There's a lot of projects coming online or expanding in the second half of the year, more toward the fourth quarter. So we take that into consideration. AI data centers. Over on the oil side, certainly the events over the past weekend are changing our thoughts on at least near-term oil prices, but we do estimate and project Brent and WTI separately and month by month to just arrive at a 2026 average. And in a couple of months, we'll start looking at 2027 as well.
Excellent. And just wrapping up, Richard, what do investors sometimes underestimate regarding traditional energy resilience, in your opinion?
I believe it is that resilience that is sometimes overlooked. Having been in the industry as an employee within oil and gas companies and as an analyst of oil and gas companies for more than 25 years, you do draw on some trends, and we've heard about peak oil several times over the past several decades. And really, the oil and gas industry is well over 100 years old, with the oldest U.S. wells drilled in the second half of the 19th century. Over that time, oil and gas demand growth immediately been dismissed, and yet here we are with demand expected to grow another 5 million barrels a day over the next several years. Additionally, the industry has a knack of using cutting-edge technology to improve drilling success, drive down costs, and open new basins to development. And a great example of this is the U.S. shale revolution that I lived through as an employee and then as an analyst in the industry. So in the late 2000s into 2010s, that helped boost U.S. oil production from about 5 million barrels a day in 2008 to an incredible nearly 14 million barrels a day of oil today, and making U.S. the largest oil producer on the planet. So I think that's a great example of just the change in technology driving huge boost in oil production for the industry.
Well, thanks for the insightful commentary today. And for our listeners, do not forget to subscribe to Richard's full weekly energy report at www.watertowerresearch.com. And I'm very excited to be hosting Richard on a regular basis moving forward.
Thank you, Tim. Appreciate it.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.